In this video, traders, we're going to look at, do I really need level 2 data if I'm day trading? Stay tuned. Hey guys, welcome to one for you day traders out there. I know there's a lot of them subscribers to the channel who are day traders, scalpers. Consider yourself as one of those ultra aggressive traders. And the question is, do you really need level 2 data as a day trader? Now, if you'd have asked me this question 10 years ago, I'd say, hell yeah, you do. You've got to have level 2 data. You've got to have your eyeballs glued to the screen. They've got to be bleeding. You've got to be watching every single tick to make any money, because that's pretty much what I was doing, staring at level 2 data all day long, whether that was futures market depth, whether that was on the London Stock Exchange in the beginning of my career in 2001, 2, 3, staring at the set screen there, looking at NASDAQ level 2, whatever it may be throughout all those years. I would have said, yeah, you know what, you've got to, because that's where the edge is. And to be honest, there is still an edge there. But the question isn't quite, is there an edge there? The question is, do you really need it? Now, I might jump the gun a little bit. Let me just briefly explain what level 2 is if you don't know what it is. And I won't spend too long because I know most of you do. Level 2 is really the market depth or the price ladder, depending on how you do it. If futures is a price ladder, level 2 is normally the terminology you use if it's an equities like a stock or a share, for example. And you'd have price along here. So let's say it's 100, it says 99, 98, I'm going to spend too long on this, 97, and you would have the number of orders stacked up in the order book. So that's 101, that's 102, and let's say I had 5,000 there, let's say I had 50 here, 103, let's say I had 20 there, 500, 10. You get the idea. So the bid would be 100, the offer would be 101. That's what we'd normally see on the book, 100 to 101. That'd be level 1. And level 2 would be showing us the market depth. In other words, what are the orders stacked up above and below the market that could potentially give us an idea of what the support and resistance are. Now, you'd normally combine that with a tape, a time and sales, which would be the orders that have gone through. So, oh yeah, 5,000 shares or whatever's gone through at 100, 2,000's gone through at 101. You get the idea. So that would scroll through. So, like I say, I've done a video where I've gone really into depth in that. So go and check that one out if this has piqued your interest. However, that's just a broad overview. So the question is, do I really need level 2 as a day trader? And do you know what? You don't. I don't believe that you need it as much anymore. And I think that there are opportunities definitely on the order book. Without a doubt, if that's the way you want to trade, then there are opportunities there. It's a different way to trade. It's a different strategy. It's a different technique. Are you looking for different things? Like we're looking for iceberg orders. We're looking for spoof orders. We're looking for algos. We can spot these on the order book and we can trade off those. But my general recommendation now is, it's such a long learning curve to go through that you can still do okay as a day trader without going crazy and looking at the order book like that. And by the way, that's a ladder as opposed to a level 2 screen. Level 2 screen is just the same thing, but just displayed slightly differently. I think now, as a day trader, you don't necessarily do that. You can make your decisions based on price action or based on patterns intraday without going that granular. And actually, do you know what you can do? A little trick is, instead of using the market depth, you can use tick charts to see exactly the same kind of thing that you would do on a market depth. So going less than a 1 minute, going to like 100 tick, 50 tick, 20 tick, something like that, you would see, let's say you saw the market moving up to 105 and coming down again, you'd see this 105 came down, and let's say there was a big buy now. Let's say it come down and it was hitting this 100 again, and let's say someone was hitting that 100, someone was reloading, algo was reloading, or it was a big size sitting there. What you'd see is, you'd see tick, 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 tick. You'd see it constantly be ticking at the 100 but not dropping below. And because of that, you could then assume that there was a big buy on the level 2, there was an algo, there was just a big thick buy, whatever it is, people were hitting him, selling to him, and it hasn't gone. And then perhaps if that's your setup, you would take a long and off there. So that's one way of kind of going really granular and microscopic if you needed to. However, you know, I would say if you're not into this yet, then it's a rabbit hole that, unless it really appeals to you, not to go down, because the expenses are really, really high if you're scalping on a very short-term basis. There's a lot of kind of emotional stress potentially involved in it. And day trading, you can scale it back a little bit. Instead of going really, really micro and going, okay, I'm going to take 10, 12 ticks out of the market, you can say, you know what, I'm going to look for the bigger move intraday. So let's say the ATR intraday is 150. I'm going to look for kind of a 60 tick move. And so that way you're trading less, you're still trading intraday. You don't need to get involved in this because you're just looking for price action. You can look at your 1 minute chart or even a 3 minute chart. Look for the price action candlestick patterns or whatever indicators you use. I'm saying my preference is price action, but whatever suits you, and then make the decision from that and just look for kind of 1, 2, maybe 3 trades a day, that kind of thing in one market, as opposed to being really, right down and going for multiple trades. So do we really need level 2 as a day trader? The short answer is no, you don't. It can help you if you want to go down to it, but I feel it's a completely different strategy. And whilst it was it's a very good way of doing it, potentially, I don't think you really need it to get leverage, to get traction, to get some momentum forward. You can just focus on a lower time frame chart, look for slightly longer trades, but still intraday on a day trading basis and still do okay. All right, guys, whatever you're doing, keep the risk managed. I'll see you in the next one. Bye-bye.